Ever wondered how the stock market works? It's a bustling hive of activity, and at its core, it's essentially a marketplace. But instead of buying and selling goods, this market deals in shares of publicly held companies. These shares represent a piece of ownership in a company, and they're issued, bought, and sold right here. It's a fascinating world filled with opportunities and risks. Now that you know what the stock market is, let's dive into how it works. So, why does the stock market exist, you may ask? Well, the stock market serves a dual purpose. Firstly, it provides a platform for companies to raise capital. Imagine you have a brilliant idea for a business but lack the necessary funds to bring it to life. By selling shares of your company on the stock market, you can acquire the capital needed to grow and thrive. Secondly, the stock market offers an opportunity for investors to share in a company's success. When you buy a stock, you're buying a piece of the company, becoming a shareholder. As the company grows and profits, so does the value of your stock. Additionally, some companies distribute a portion of their profits to shareholders in the form of dividends. So, in a nutshell, the stock market exists to fuel business growth and to allow individuals to invest in these businesses, sharing in their success. Now you're probably thinking, how does one buy or sell stocks? Buying and selling stocks isn't as complicated as it might seem. It's a process that involves a few key players, and understanding their roles can simplify the whole experience for you. Firstly, let's talk about brokers. Brokers are the intermediaries who facilitate the buying and selling of stocks. They could be individuals or companies, and they're the ones who process your orders to buy or sell on your behalf. Now let's move on to the types of orders you can place. Market orders and limit orders are the two most common. A market order is when you want to buy or sell a stock at the best available price in the market at that moment. On the other hand, a limit order is when you specify the price at which you want to buy or sell a stock. This gives you more control, but it also means the order might not get filled if the stock never reaches your specified price. And then, we have the concept of bid and ask prices. The bid price is the highest price that a buyer is willing to pay for a stock. The ask price, conversely, is the lowest price at which a seller is willing to part with their stock. The difference between the two is called the spread. Now that you know how to buy and sell stocks, let's discuss how to make smart investing decisions. Investing in stocks can be risky, but understanding the basics can help mitigate some of that risk. Let's delve into making smart investment decisions. It all starts with research. Blindly investing in a company without understanding its operations, financial health, and market position is like sailing a ship without a compass. You may get lucky occasionally, but in the long run, it's a dangerous game to play. So, before putting your hard-earned money into a company's stock, take time to research and understand the company's fundamentals. Look at their financial reports, evaluate their management team, and analyze their market position and growth prospects. Diversification is another key aspect of smart investing. It's a simple concept, really. Don't put all your eggs in one basket. By spreading your investments across a variety of stocks, you reduce the risk associated with any single investment. If one stock performs poorly, the loss can be offset by the performance of other stocks in your portfolio. Diversification can help smooth out the ups and downs and provide a more steady return on investment. Finally, remember, investing is not a sprint, it's a marathon. It requires patience. The stock market is not a casino, and trying to time it perfectly is a fool's errand. Focus on long-term investing and stick to your strategy, adjusting as necessary based on market conditions and your financial goals. Remember, investing in the stock market is not a get-rich-quick scheme. It requires patience, research, and a well-thought-out strategy. Now, you've got the basics of the stock market under your belt. From understanding what the stock market is, to its purpose as a platform for companies to raise capital and for investors to gain ownership. You've learned how to buy and sell stocks and the importance of making smart investment decisions. It's a journey, not a sprint. And armed with these fundamentals, you're now ready to venture into the world of investing. Remember, every successful investor started with the basics, just like you did today. Happy investing!